Top three things in my notebook this morning. Number one, the US dollar. Number two, the British pound. And number three, inflation, particularly inflation accelerating here in the US. So first on the dollar obviously does not like this idea of the untapering. And again, to be clear, untapering is a market expectation that is getting priced into things like gold. And again, that would cause rates down, dollar down, gold up. Gold's up 7% for the year to date. So again, while we did get squeezed in U.S. equities yesterday, I would not confuse that with what's developing here, which is a down dollar, and a down dollar is just not good. Now, the second point is the British pound. Now, this, of course, remains our favorite currency in the world, certainly relative to the U.S. dollar. The British pound continues higher this morning, and it has quite the opposite setup versus what you see currently in the U.S. You have a central banker there, a new central banker, much like the U.S. has a new central banker, but a very different tone, a very different level of credibility for Mr. Carney relative to Janet Yellen. So I do think that's why the British get a much stronger currency rate now, and I do think, coincidentally, that's why UK consumption growth continues to accelerate. So again, basically the same call we had in the U.S. last year, strong dollar, strong America, growth accelerating. That's actually not happening now in the U.S. It's happening in the UK. Now finally, inflation accelerating, just the update. CRB index now up 3.6% for the year to date. That's at a new high, and again, that's just, the fact of the matter is that you're seeing things like gold have huge moves alongside everything else starting to levitate. Obviously, you've seen big moves in coffee, natural gas, all the things that we consume other than the Fed telling you that you don't really need to count that. This, of course, is going to slow consumption growth, which incidentally is why the consumer group is the worst performing stock market sector within the S&P 500 at down 3.5% for the year to date. So those are your top three things.